What do you think is going to happen in 2026 throughout the housing market?
Nobody's got a crystal ball. The point is, I'm starting to see the dogs coming. All the people that bought, that shouldn't have bought, that didn't know, or joined all these groups and pooled all their money together, that bought properties that were dogs, overpriced dogs, are now stuck. Okay? Because there are some $100,000 unit properties out there in Tampa. I looked at them. But they're dogs. I got to come in and spend millions of dollars. They need roofs. I don't like the way the metering system is, or there's all kinds of issues in them. They're the gray market ones, okay? The ones that might be in a flood area, all the gray markets. The garbage comes first. But eventually, I'm hoping the good stuff will come, unless those rates come down, but they haven't really gone down a lot. They went down a little, but not much. Now, if rates come down, then their values will go back up. But if rates stay the same or go up, then there's going to be some blood in the water. It has to be.
Why haven't we seen all these mass sell-offs throughout commercial real estate yet? Are you noticing foreclosures? Are you seeing
because of the stock market? That's why. No. Okay, we all know what the is your problem. The cat fell on the floor.
The cat fell on the floor, and you clawed at it with your foot when it was like the lid side was up, and then you put it on top. You don't need a cap
I just
on
used
it.
my foot to push it.
You grabbed it with your toenail.
Well, I just don't want any of your germs getting in my body. My toenails are clean. I took a shower this morning, but I have been walking barefoot all around here. All right. So anyway, listen, it's all because of the stock market. And you're a stock guy. Okay. All right. Let's play with Jack a little. Maybe he'll learn something before this is over.
I would like that. That's the goal.
Maybe he'll learn something.
We try.
All right. Basically, the value in a bank, you know what that is?
It's the debt that they have.
Exactly. It's not that stupid. Yeah. The bank is only worth what their loans are. The deposits. Deposits. They gotta have liquidity requirements. They gotta have deposits. But the bank makes money on loaning money. So basically, the bank is only worth the loans that they gave all that money to. If the loans suck, then the bank sucks. And when the bank sucks, the stock sucks. And they don't want that to happen. They don't want to see. All right, we had a crash in 08. You know why we had the crash in 08? Because the banks gave out too much money. Can I say?
Yeah, go for it.
The banks gave out too much money to people they shouldn't have, and there was a lot of crooked shit going on. That's what caused that crash. So they had loans that were worthless. Okay, or worth pennies on a dollar. Now, we're not in the same situation. The people that they loaned the money to, they weren't intentionally crooked or, poor judgment or poor loans. At the time, they made sense. The bank takes risk. The bank didn't think of the risk down the road of rates going up. They didn't hedge themselves enough. Maybe some of them did. So, basically, when they loaned all that money out at 3.5%, 4%, they were saying, my home loan is 2%.
Here.
Not this house.
Oh, the other house. Oh, 2%. Interest only, right?
2%.
Yeah.
Flat?
Too flat,
but
baby.
It's interest only.
It's all timing.
For how many
only
years?
15 years.
15.
All right. So anyway, the bank's losing money on that because they can take that money they gave me and reinvest it at 6, 7, 8%. The point is this. The banks are not making money on these loans now only because interest rates gone up and they underwrite a lot, at a much more higher debt ratio. You know what debt ratio is, right? How much debt you have towards your principal. Anyway, long story short, if the property can't cash flow anymore or it's breaking even. See, I think what's happening is it's breaking even right now for all these people because the rates are going up. They can't refinance. If they refinance, they got to go refinance at a higher rate. Okay? So a lot of these fixed terms are up. Typically, commercial, I borrow money. In my world, it's 3, 5, 7, 10, depending on the asset. You pick your choice on how long you want to fix the rate for. So, sooner or later, all the people that took, whatever loans, they're going to, fixed rate's going to be up. They're going to have to go to the market and they can't afford it or they might break even. They'll say, I'm not owning this big ass place for no return. If they're non-recourse loans, they'll throw the keys in. I'm starting to see that. Well, because nobody's going to make a capital call and bring the mortgage down. So basically, they'll walk from properties, big groups, that, different individuals, investors, or the bank's going to take them back because they're not making a mortgage payment. I mean, but we don't know. I mean, if rates go down or who knows, but the banks don't want you to know. Believe me, the banks are sitting on a lot of loans right now that they probably wish they didn't have.
So what's your prediction, though? What do you think is going to happen over the next year? Are you bearish? Are you bullish on the market?
All I can do is tell you I'm hoping and praying that I'll start seeing some distress in the market. I'm starting to see it trickle down. Like I said, the dogs come first. So, that's what I'm seeing. But hopefully I'm going to start seeing the stuff that's worth me buying, the good stuff.
So far, what have you had to do to sell your places? Because you're also selling into the same market that you're buying.
Apartments. I'm selling retail based on a cap rate. People buy shopping centers all day long at 7 caps. If it's a good brand with good tenants, there's always guys out there that are willing to get 7% return, 7 cap, as long as, they're not borrowing too much more money above the 7 cap. Because basically, if you make it 7% on the retail center and your mortgage is 7%, then basically you just get 7% on your down payment, correct?
Mm-hmm.
Some guys are happy doing that, But right now, if you buy a 7 cap, strong guys that buy shopping centers can borrow definitely around low 6s, if not 6.
Yeah.
So basically, they make a point spread on the bank, and they'll make 7% on their return on their down payment. There's always a market for that,
Yeah. So what would it take right now to see the market
And hotels
fall?
are just too much for me right now. I got too many hotels.
Yeah. What would it take for the market to fall? To start to see those distressed properties come up?
For the banks are going to have to say, okay, we already played the game, pray and delay. And now we got to figure out what we're going to do. We delayed. I mean, how long are we going to have loans being extended? I mean, I had some loans come due, and the bank just sent me a paper saying, "Oh, please sign this, and your loan is extended." I mean,
Really?
they don't want to with me. They don't want to with the property. They don't want to go for the money. Let's just keep it the way it is so we figure out what the hell we're going to do here. I mean, it's all about money and rates. Hopefully we'll start seeing some people can't handle today's interest rates. Plus, in Florida, we got other issues. I don't know about other states. It's for a while there, insurance was killing us because of these hurricanes and all. Whenever there's a hurricane or a big expense insurance company's got to pay out for, what do? They come in and raise the rates and make all the new people that are getting insurance now pay them back all the money that they had to pay out in that hurricane or disaster. That's what they do.
Yeah.
Insurance companies don't lose. We're insurance. We ain't taking a loss.
Now, by the way, quick thanks to our sponsor, CyberGhost VPN, for sponsoring this video.
CyberGhost is one of the most trusted VPNs out there, with over 38 million users worldwide and over 20,000 strong reviews on Trustpilot.
Using a VPN is one of the simplest ways to protect your online privacy. Like, a lot more eyes are watching your online activity than you think.
And of course, even incognito mode does not stop it. Your internet provider, your work or school network, and even your home Wi-Fi router can still track what you're doing.
CyberGhost helps by encrypting your online data and running it through their secure servers. You just pick from over 100 locations before you browse.
It also lets you access geo-restricted games and content from over 40 streaming platforms, including Netflix, Amazon Prime, and Disney+. And here's a little special sauce I'll sprinkle on top. Changing your location can actually help you find better deals online.
CyberGhost works on all major devices like Mac, Apple, iOS, and Android, and you could protect up to 7 devices at the same time.
And guys, if you're thinking about it, using our link in the description gets you their absolute best deal at $2.03 per month, plus 4 months for free, which is 84% off.
They also offer a 45-day money-back guarantee, so it's risk-free to try it out. We like it enough to recommend it to all of you watching.
Once again, the link is down below in the description. Thank you so much to CyberGhost for sponsoring this episode.